Well, of course, the focus isn't necessarily on the cut itself today. That was widely expected by markets, given the euro area inflation has dropped below the 2% target to 1.9%, given you've had the lower energy prices and the rise in the euro against the dollar in the aftermath of Donald Trump's Liberation Day, of course. So the focus really, as you say, on the path ahead and clues as to when they're going to cut again. Is it going to be in July or in September, as economists expect? And if we look at that inflation forecast, as you say, they have downgraded, as expected, the inflation forecast for 2025 to 2% now from 2.3%, for 2026 to 1.6% from 1.9%. And there is, among some on the Governing Council, a concern about the persistent undershooting of inflation. But others, like Christine Lagarde herself, say they need to look through that, given all of the risks in the medium term to the upside to inflation, not just from tariffs. If Donald Trump, for example, raises tariffs from 10 to 50% after that July 9th deadline and the EU retaliates, but also from the expansionary fiscal policy as well. Now, in terms of the market reaction, and I know you'll talk to Jordan Rochester about this, because the traditional link between FX and rates has been a bit severed in recent weeks, we weren't expecting a huge amount of euro volatility off the back of this. The focus really, frankly, is more on the non-farm payrolls report tomorrow. So now we look ahead to the press conference. I am sure Christine Lagarde is going to keep her cards very close to her chest when she's inevitably asked if a follow-up cut is coming in July. And I'm sure she'll also be asked about her own future here at the ECB, because there's a lot of speculation that she wants to go and lead the World Economic Forum, and she hasn't denied that she's considering it so far, and it would make sense given that inflation's back below that 2% target.